What's up, traders? Buckle up, hit that subscribe button because we're diving into something massive right now. The Forex market's on the verge of a seismic shift, and you need to be in the know. Picture this. Hedge funds are placing colossal bets on the stock market crash and sending shockwaves throughout the financial world. But that's not all. Over in Japan, yields on JGBs and corporate bonds are heating up, turning heads for investors outside the country. And for those seeking alpha, they're paying attention. They're getting juicy, competitive, and downright irresistible for them. And here's the kicker. For those of you that are bold enough to play the currency game, the yen's long-term potential to skyrocket could mean massive returns, not just from assets, but from currency gains too. This is urgent, it's wild, it's unfolding as we speak, so stick with me because you're not going to miss what's coming next. What's happening right here in the bond market, and the bond market has been known to tough out a lot of people. You know, the bond market doesn't lie. If you're not paying attention to the bond market, you got to pay attention to it. First, I'll call your attention over to the U.S. indexes, the Dow Jones. Everything's down slightly. Monday is going to be a very, very important point to see if we can start to recover. There have been massive puts that hedge funds have placed on the indexes and the stocks themselves. They're looking for a massive retreat in stocks before the marketplace recovers. I don't know if they're right. You know, hedge funds have been known to be wrong, but we just have to wait to see how it plays out. But what's going on right now with the bonds? Okay, what we have here is a convergence of interest rates, and you know, with the narrowing of interest rate differential, the attractiveness of foreign bonds for Japanese investors, for foreign bonds. For Japanese investors has diminished. In other words, they would be more than happy to bring back their own currency back home. Why? Because rising domestic yields lessen the incentive to assume a currency risk or incur currency hedging costs associated with overseas holdings. So that shift has prompted the Japanese investors to relocate capital towards the domestic bonds over the last 6 to 8 months. Now, for us investors outside of Japan, the yields on the JGBs and corporate bonds are becoming more competitive. Furthermore, for those that are willing to take on currency risk, the yen's potential for appreciation in the longer term could provide substantial gains from both the asset performance and currency gains themselves. So we'll first look at dollar yen, and then we'll go into gold, because gold is an important commodity to look at, because that's basically telling us the inflationary ideas and, you know, where the big boys are, if the big boys are still continuing to think that, hey, it's inflationary, and also I want to basically hedge myself, I want to hedge against the US dollar. So let's look at dollar yen. Right now, this is weekly analysis. It is Sunday morning at 10:02 on February 23rd, 2025. This is how we stand right now. Right now, I'm seeing that there's short-term resistance at 150.03 and 150.75. What I think that could happen is that the marketplace could actually come up into this area and start to track in between these two levels right here, basically getting people that aren't in the know think that perhaps we can get an upward movement towards, 152 again. I don't really see that happening right now, and the major warning level that I have for dollar yen is if we can break, I'll use my brush, if we could break through the 148.52 is a warning. Okay, we're tracking down to an all-important point of 147.16. So that's where we stand right now. Now, you got to pay attention to the daily analysis that I do, because I will calculate shorter term points that we could basically use as support and resistance to trade against. Generally, right now I think the dollar yen is bearish. That's a genius statement, isn't it? I mean, I came into this thing thinking dollar yen was recovering. Technically, I thought it was recovering, but then if I place those fundamentals that are running in the background, it's giving me a different scenario, and I'm trying to pay attention more towards what the bond yields are telling me and what the short-term Japanese bonds are telling me. there's some pressure on the Federal Reserve to cut interest rates. I think a big dump in the stock market would actually force them to do it. Again, as I said in the beginning of the video, it's really important to see what Monday unfolds for us. The ES 100 is main support at 6,000, and I'll be doing an update on those indexes shortly. But let's move on over to gold. Right now at gold, we're basically trading in this big rectangle, okay? We had a breakout point, if you saw my other video, at 2009.06 and a half. Marketplace broke up through that level. We made a short, kind of almost a high, because we had this high here at 2009.42. Did this one surpass it a little bit? 2009.46. So yeah, it went $6 higher before it had a retrace back down to the important level of 2009.18, which I did call. I said that level is an important level to hold, and also 2009.13 below it. But right now, as we stand, we got this main demand point, demand area right here, liquidity level right here in between these two levels. The first levels are this 2009.18, 2009.06 right in here. Now, if for whatever reason the marketplace takes a dump, there's main support at 2008.94. I don't really see it going down there, but if it does, man, I think that's a great level to accumulate gold. Now, on the breakout, okay, what I want you to pay attention, this is a 4-hour chart. A lot of times breakouts fail, and we got to pay attention to that, because there's a lot of people that are long gold and they're looking to unload it. Not really because they're going short it. They just want to take some profits on a pretty big portfolio, which is understandable. So what we have to look for on this breakout, if this marketplace could break this top right here, what we need to see is we need to start to see that the marketplace comes up, breaks out through this top, comes back down. It could go back down into the middle of this, which wouldn't be a major concern. A concern would be a break of the bottom after a breakout upward. But then I can see it continuing to consolidate in between these two levels before it hits its ultimate target of 2009.70. That's the level I have right here, 2009.69. That's an important level. I do believe there will be consolidation there and a pushback down again before we can break up through this level and get to 2009.92, which is the first target before that magical 3,000. So that's what I got going for you in gold. All right, let's move on over to good old sterling yen. Hang on here a second. Actually, we can go over to dollar yen, right? Okay, so 2000, okay, warning level. Okay, we got that one done. Let's go on over to good old sterling yen. All right, sterling yen itself, okay. There is resistance at 190.05. Main support really that we got to watch out for is the 187.90. If we break this 187.90, we're attempting a longer term support at 187.03. Now remember, we fell from that high of what was it, 208.10. The ultimate high of sterling yen was 208.10. We fell to 180. I mean, so it was a massive move down, so basically, the marketplace is tracking lower off of the high that we had, that basically has been holding, obviously. So right now, because of dollar yen is the one that's ruling this whole thing. So we got to pay attention to dollar yen because it is the driver. And I'm going to go into cable right after this, sterling dollar, because really cable is in a funeral parlor, and it has been in a funeral parlor. But we're going to go over that. So weekly, 187.89 is an important point that we need to watch to make sure that it holds for the short term. Right here, holds for the short term to potentially get us back to like up in this level over here of the 190. I don't know. I mean, it all depends on what the open's going to be. It's really important at the start of the week. So if we blow through this 187.89, don't be so quick to like, oh, I'm going to go short. No, actually wait a little bit, because I think that we could see some consolidation in between the 187.89 and the 187.03. I think maybe we'd even go up to like 188, say 35-ish, and that would be for me would be a good level to like look to sell it. So I think that if we break this, we're going to see some consolidation. We could probably see back up to like 188.40 before we get that big dump to 187.06. Let's go on over to good old sterling dollar itself. Sterling dollar, it has been in this rectangle forever. I mean, forever, man. Trading between these two important levels right now. All right, so if dollar yen dumps, this is too big of a rectangle. Gotta move this up to here. If dollar yen dumps, okay, you know, there's a potential of a sterling yen to sterling dollar to get to 127.08. It's got resistance at 128.17. So in order to like move up to the next rectangle, we got to get above 127.08. If for whatever reason something goes on, you know, unforeseen, even markets are markets, the markets are never wrong. Dollar yen starts to rally a little bit and sterling falls below 125.70. We're looking at, you know, 124, I would say 124.90, 124, that's good, 124.88 before an ultimate. I mean, if it fell out of this thing, the ultimate's like 123. But I don't see that happening as well. I think cable is just going to be where it has been, funeral parlor. So let's go and get on over to good old euro yen. Euro yen, the warning level I have in euro yen for this week is 155.19. A break of 155.19 drives us down to 154.21. The only way this thing shows any strength on a longer term, on a weekly basis, is a break above 158.01. So we got a lot of wood to chop. There's not much muzzle velocity in it. It's been really dragging along. You know, cable has been really holding up. Sterling yen has been holding up better than euro yen. I mean, you could watch the price action and you could see it. If, however, we get above 158.01, there's major resistance at 159.50 on the upcoming week. If we break this 155.19, we got that 154.21 below it and 153 following that. Now, remember, I tell you, you got to pay attention to my daily analysis, because that is the most important analysis, you know, that I give you during the day. And you know, you could basically, I give you the points of the day to watch. So head on over every day to check my daily analysis out. If you are one of those mad men or mad women that trade Forex, you're not going to want to miss my analysis. I can assure you that it's great. So please, if you like what you see, like and subscribe. Leave me some comments. I want to hear what you guys have to say, and I'll see you in the next video. Cheers.